Hello, everyone. Welcome to the Financial Advisors Want to Know podcast. I'm Catherine Tindall, a CPA with Dominion, a specialty tax and accounting firm that works with financial advisors. And on today's episode, I have Jonathan Wilson with us. He is the co-founder of FinCEN Report Company, LLC, a leading legal expert on the Corporate Transparency Act, which is going to be the topic of our episode today. As a corporate partner at Taylor English Duma, he's spent 33 years of experience in corporate M&A and securities matters. He's previously served as general counsel or chief legal officer at web.com and EasyLink Services International. He's authored the Corporate Transparency Act Compliance Guide with LexisNexis and the Lexis Practical Guidance on the CTA. He holds a BA from the College of William and Mary and a JD from George Washington University. He's been recognized by the best lawyers in America from 2017 to 2022, and Georgia Super Lawyers 2021 to 2024, and is a former Board of Governors member of the State Bar of Georgia. So thanks for joining me today, Jonathan. It's a very timely conversation with some of these deadlines approaching.
You bet, Catherine. Thanks for having me on.
So I think we talked about this a little bit in the pre-show, but for advisors who are listening to this, some of the reporting requirements that are going to come up, they kind of exist in a no man's land, especially for very small business clients where maybe they don't have regular contact with, legal counsel. Maybe they only have a, once a year relationship with a tax professional who's a bit absentee. And so for a lot of financial advisors who may have clients who are business owners or, for advisors who are business owners themselves, this is a new requirement that they really need to get a handle on. And at least understand the basics of it. So could you speak a little bit about the basics, some of the reporting requirements that are going to come up for them and what you think that they should know, not as somebody who's going to be executing these filings, but just as somebody who needs to understand that there's a requirement here and what's involved?
Yeah. So for the financial advisors, I don't know that you really need to learn how to become an expert in this particular law. It's more going to be a situation where you're going to recognize that your client has a need and get them pointed in the right direction. As you and I were talking, no one really owns this particular law. Everyone knows that you have to pay your taxes once a year and that you go to a tax preparer or a CPA to get help with your taxes. You wouldn't go to your attorney for that. There are other legal things that you have to do that you would go to your attorney, you wouldn't go to your CPA. When Congress passed this law, it wasn't really clear whether this is a CPA kind of a thing or a lawyer kind of a thing or something else. And as a result, no one has really sort of taken the bull by the horns and elected to guide their clients through the process, which is one of the reasons why, at least by the middle of the year, fewer than 10% of the expected population had actually gone through the process of filing their first report. So I would not be surprised if we have a large degree of non-compliance by the end of the year. So we're probably going to see some words coming down from Treasury in early 2025, taking some action on that. But the bottom line is, especially for financial advisors who are dealing with high net worth individuals, very often business owners, or at least wealthy individuals who own interests in LLCs and corporations, what is it that they need to know? Well, the Corporate Transparency Act requires almost every corporation and LLC, except for those that are exempt, to file this Beneficial Ownership Information Report, or BOI report, before the end of this year. The report needs to set out some basic information about the LLC or corporation, and then it also needs to identify all of the beneficial owners of the company. A beneficial owner comes in one of two shapes and sizes. There are those that are beneficial owners because they own 25% or more of the company, and those that are beneficial owners because they have substantial control over the company. Substantial control is an entire page-long definition, but to sort of boil it down, it includes everybody on your board of directors. It includes all of the senior officers defined as president, CEO, CFO, and chief operating officer. And it would also include anyone else who has some extraordinary power over the reporting company, like the ability to replace or appoint senior officers, or the ability to replace or appoint a majority of the board of directors. So when you come across, as a financial advisor, a client who owns a bunch of LLCs, you might say, hey, have your LLCs filed all of their BOI reports? Oh, what's a BOI report? Well, that's a complicated thing. You need to file it this year. get with your attorney, get with your CPA, get with finsendreport.com, find someone to help you get your report filed on time would be the path that you would want to take.
Yeah, and it's a great place to have a touch point with a client too, because if you're looking for reasons to reach out to them or places to add value, just including this in your questions at year end of, hey, have you already met this filing requirement? Did your tax professional talk to you about this? Or did your attorney talk to you about this? You might be the only person that has talked to them about this so far and is going to catch it in time. For people who haven't done their filings yet, which is 90% of people listening, what are the deadlines involved for this first year of reporting? Hey there, Catherine here. Thanks for listening to the conversation. Just wanted to explain a little more about what we do. So I'm a CPA here with Dominion. We're a tax firm that works specifically for financial advisors as they're growing and scaling their practices to help them avoid tax waste, make the right calls, and grow practices that they love. So if you're interested in saving more, you can DM me on LinkedIn with the word guide, and I'll send you over our guide for financial advisors to scale tax efficiently. All my top tips to unlock six-figure savings. Thanks, and keep enjoying the show.
Right. So all of the non-exempt reporting companies that are in existence before 2024 have until January 1, 2025 to file the first report. So in essence, it's an end of year thing. For any reporting companies that were created during 2024, they have 90 days from the date of formation to file a first report. And beginning at the end of this year, January 1, 2025, newly formed companies will have only 30 calendar days to file their first report.
Yeah, that's a really tight timeline. And so the other piece that I think people should keep in mind is what kind of fines are involved for non-compliance, or what kind of things can happen if you end up being non-compliant with this new law?
Sure. So the Corporate Transparency Act is aimed to fight money laundering and financial crimes. As a result, Congress and the regulators have assumed that the bad guys will try to get around the requirements and will simply refuse to file. As a result, these laws have teeth. We cannot mess around with these filing deadlines. In some ways, they're even more strict than your tax filing deadlines. The law requires or imposes an initial $500 per day fine for every day that a reporting company is late. That was $500 per statute. It gets escalated per inflation every year. And in 2024, that's actually a $591 fine. It's probably going to go up next year. In addition, if an individual fails to file in a willful manner or willfully files false information, that can be punished as a felony with up to 2 years in prison. And if the filing error takes place in combination with another financial crime, such as tax fraud, it can multiply into a 10-year felony. So very steep fines and penalties involved. And so we got to take very careful note of all those deadlines.
Oh, yeah. And the abatement process will definitely be, that's going to be a whole other area for people, because I think a lot of people are going to miss this requirement. Well, that's
absolutely
spooky. $500 a day is a spooky fine, especially for a small business where they could go months and months and months not realizing that they're in non-compliance. So could you talk a little bit about what you've done with FinCEN Report Company, and just a little bit about how you guys have been working with people to resolve this reporting requirement?
Absolutely. And before I forget, I want to circle back and talk about amendments to reports, because that's also kind of a tricky thing and different from most other laws. But finsendreport.com is a tool. It's a filing engine. We don't provide any legal advice. We don't provide any professional services. It is simply a platform to file your reports. Now, people should know you can go directly to finsend.gov and file your report for free. You don't necessarily need a lawyer. You don't necessarily need a filing service. So why would you use one? Well, one of the things about these reports is that every beneficial owner needs to include 5 pieces of personal data about them: their full legal name, date of birth, home address, not a business address, and then an identifying number, which could be a driver's license or a passport number, along with a photocopy of that driver's license or passport. Now, let's say Catherine is an investor along with half a dozen other investors in a real estate deal. And you might trust the promoter, but you don't really know the other investors. Do you really want your home address and birth date and driver's license shared with all those other individuals? If you're comfortable doing that, by all means, use the government website and email your driver's license to whoever's going to file it and just trust them to get it right. If you don't want that, then you need a filing system like ours, because what we let you do is Catherine has her own private account where her personal data resides, and no human being other than Catherine can see that. Now, if Catherine is one of several investors in the LLC that needs to file the report, whoever is running the LLC account will send an invitation to Catherine. Their account will connect with Catherine's account. And now when the LLC files its report, the report will extract the data out of Catherine's account and put it into the report that gets filed with the government. But none of the other investors, none of the senior officers of that LLC will actually put their own eyes on Catherine's personal data. Likewise, Catherine will not see the personal data of the others. That's what we do.
Yeah, that is a very elegant solution, because especially, like you said, if you're a fairly passive investor in something and you have a bunch of other owners that you really don't know, do you really want them to have your home address and driver's license number? Like, that seems like that would just be such an opportunity for data mismanagement, or if the company is going to file on its own behalf, like, does it have the ability to maintain data security for information like that? So that's a very elegant solution.
That's exactly right. So a lot of our channel partners are actually Swiss wealth managers, Swiss investment advisors, and banks. And I was talking to one at a conference a year ago and explaining how this new crazy American law works. And she said, "What am I going to tell David Beckham when he has to disclose his personal address?" I said, "Well, you need a system like ours to keep the celebrities' data confidential." And that's one of the reasons that we created our system that we did. The other key feature I forgot to mention about amendments. Okay. So let's say your LLC files its first report before the end of 2024. Great job. The law says that LLC needs to file an amendment when there is any change in any of the data fields contained in the initial report. Now, we've already said every beneficial owner, name, address, driver's license, photocopy, right? So one of your investors in that LLC changes their home address. Bang. That starts a 30-day clock ticking by which the LLC needs to file the amendment to account for that investor's new address. How is the LLC supposed to know that investor changed their address? Well, if you're using finsendreport.com, you will, because when the individual, Catherine, logs into her personal account and keys in the change in her personal address, our software notifies every reporting company that has our subscription that Catherine's data has changed and you now need to file an amendment. With our service, you pay for 1 year of service in advance. The reporting company can then press a button, file an amendment at no additional charge, and they maintain in compliance. So we have one client in the Atlanta area, a real estate investor who's connected to over 400 different LLCs. If his data ever changes, he's only ever going to key it once. The software is going to send out the 400 notifications to the 400 LLCs. They will then be able to file their amendments.
And so for companies that have this, if you're in non-compliance with an amendment, is it that same $500 fine?
It's $500 per reporting company. Yes.
Oh, wow. So if that got screwed up for that one client that has the 400 LLCs, 1 day of non-compliance, that's brutal.
Yeah.
Yeah, well, and that raises a lot of questions of enforceability and things like that. But and then I know in our previous conversations talking about there have been some challenges to this law, but the challenges that have come through so far are not going to be in time for this first filing deadline. So I know some people are kind of waiting, hoping that this law might go away, but I know you were telling me last time that there's no chance of that. So this is something that does need to be, addressed.
Yeah, as a lawyer, you can never say never, but we were just talking about this on LinkedIn today. The case that has gone the farthest so far comes out of the Federal District Court for the Northern District of Alabama. It held that the law was unconstitutional, but it only applied that ruling to the members of the association who were parties to that case. That case is now on appeal to the 11th Circuit. There's going to be an oral argument later in the month of September. And ordinarily, the 11th Circuit comes out with rulings anywhere from 3 to 6 months after oral argument. So probably January, February, March of 2025, we'll get an answer. But that's only part of the story. Everyone remembers the Affordable Care Act, Obamacare, and all the lawsuits and all the Supreme Court cases. It'll be the same thing with the CTA. So there are half a dozen other cases out there. Some will go one way, others will go another. Probably in the next 2 years, this makes its way up to the Supremes, and we'll get some kind of an answer. But until then, it's still the law of the land.
Yeah. Yep. And you do not want to risk those penalties. That's for sure.
No, we definitely don't.
Not at all. Well, thank you so much. Oh, go ahead.
Well, it's not only the penalties, though. Almost every bank loan agreement now is going to require compliance with the Corporate Transparency Act, and the banks are even going to ask you to give them a copy of your BOI report as part of your compliance package under the loan agreement. So it's going to get all integrated into your financial reporting. Yeah.
Yep. Yeah, and I wouldn't be surprised if they maybe update something on the tax returns too, like a checkbox or something like that at some point. Like how
I haven't seen that regulation, but that's a good idea. Yeah.
Yeah, it might. I would be surprised if they bring it on, just because they seem to be tacking everything onto the tax returns after a certain point. But so thank you so much for joining me today. And for people who are interested in learning more about the FinCEN Report Company, the link to the website will be posted in the show notes wherever you're listening to this. Are there other ways or other recommendations that you have for people to get more information if they're interested in it, Jonathan?
Well, the best way would just be to come to our website, fincenreport.com. And there are a dozen different ways to get me once you find yourself there.
All right, great. Well, thank you so much for joining. And for those listening, please do check out the website and, dip your toes a little bit into some of these requirements here. But now you can't say you don't know. And thanks again, and welcome. You're welcome to, click through and visit us at Dominion as well to learn more about the tax work that we do for advisory firms. Until next time, thanks for joining us on the Financial Advisors Want to Know podcast.
Thank you.